Hello, my Life with Crypto brothers and sisters. Welcome to another Money Monday crypto training. I'm your host, Kelly Sunshall. Welcome to part 1 of our crypto trading live mini-series. Today, we're going to dive into crucial trading rules that are the foundation for long-term success in the crypto market. Now, these rules, you may think that, oh, this is so simple, this is so basic. I want to get into the meat. What's the real stuff I need to know to be a good trader? Most people want to jump right into technical analysis. And technical analysis, of course, is very important. But if you skip these fundamental pieces of information I'm about to give you, if you skip these, if you don't have a foundation, then you could make a bunch of money, but then turn around and lose it. And it's happened to so many people. They make a bunch of money in a bull market. They think they're a good trader. And then they go and do a bunch of stuff, maybe as the bull market is coming to an end. And then they end up losing half or all of what they just earned in the market trying to be a short-term trader. And it's because they didn't take into consideration the 10 rules that we are about to cover here. So if you're listening live, please give me a thumbs up. Let me know that you're here. If you enjoy this content when you listen to the replay, I love for you to please leave a comment in the comment section and let me know that you're getting something from the material. I like to know that I'm on the right track with the kinds of stuff that you guys would like to actually use in your life. So here we go. Let's go ahead and get started. So today we are going to discuss the 10 rules to live by before putting your money at risk. Is there a replay? There will be. As soon as this live training is done, the copy of the video will be available to you in the guides section of our Facebook group. So if you belong to the Facebook group, which you obviously do, just go into the guides section and all of the Money Monday trainings are listed there. And this one will get posted shortly after I finish today's training. So thank you for asking. And I would love to know how to say your name. That would be wonderful. It's a cool looking symbols, but I don't know how to say it. Okay. Let's go ahead and get started with our 10 rules. Rule number 1, investment amount. Now, I know you've heard this time and time again, but it is so important. Never invest more than you can afford to lose. Philman is my name. Thank you so much, Philman. Never invest more than you can afford to lose. Your investment should be a significant but manageable amount. Now, what does that mean? It's really different for every person. It has to be a significant amount in order to move the needle. If you don't put more than $10 or $50 in there, you might double, triple, or even quadruple your number. You could even 100x, but 100x on, $10 is still not going to make you that much money. If you're looking to get into 6 and 7 figures, you got to put some amount towards it, but you got to be careful. You don't put all the money in your savings account into crypto trades. And then if it goes the wrong direction, if you're not successful, you end up losing all your money. You lose your house, you lose your dog, you lose your wife. You know how the country and Western songs go. It just ends up being not fun. So you've got to be sure to only use an amount that you can afford to lose so that you have enough to go back and try again. Okay. Rule number 2. Start with spot trading and master the basics there. Practice with live charts. Practice by watching live charts and paper trading before venturing into leverage or futures trading. Now, what do I mean by that? Spot trading is just trading the current price of the asset. So Bitcoin, if Bitcoin was at $38,000 today, then that would be the spot price. And if you trade Bitcoin, you would be spot trading. There are platforms where you can leverage trade, which means you could actually trade 2x, 3x, 5x, 10x, sometimes as much as 30 or 50x of what your actual amount is. So if you had $1,000 that you wanted to use for trading and you go to a leverage site and you say you want to 2x leverage your $1,000, then you would actually be trading with $2,000, but your underlying capital would only be $1,000. So you got to be careful. You can make a lot of money with leverage trades, but you can lose a lot as well. So learn, get comfortable with spot trading, then move on to leverage trading. Okay, let's go on and look at number 3. Protect your capital. This is the theme here for the first few of these rules. Implement and understand the power of stop loss and risk management tools. These are your best friends in a volatile market. All right, number 4, follow the trend. Don't fight it. It's so true. Use the weekly time frame. 50-day is the most common moving average to identify long-term trends and trade in the market's direction. So if the market looks like it's in an uphill trend, like it looks like it is right now, people who go and try to short the market when the trend is up tend to lose. Why? Because shorting means you're hoping that the price goes down. But if the trend is uphill, which is what it is right now, the market's probably going to go in the opposite direction you need it to go. So don't fight the trend. Figure out what it is using long-term time frames and go with the trend. All right, number 5. This is going to take a while to get through them all, so I'm going to go through them relatively quickly. Number 5, no emotional attachments. There are no good or bad assets. Now, a lot of people in the Bitcoin world, Bitcoin maximalists, will argue with you and say Bitcoin is the best asset. And there's probably some truth to that. I'm not going to argue with people who believe that. I believe Bitcoin and Ether are high quality assets. However, there are times when you want to be selling them and times you want to be buying them. So there really are no good or bad assets. Don't fall in love with one of them or two of them. Detach your emotions and trade the chart, because the profit or the goal is profit, not falling in love with an asset and then holding it forever. Now, remember, trading and investing are two totally different things. Right now, we are talking about trading. When I'm talking about investing, I will hold a long-term asset and I will hold it for a long period of time, even if it's gone down. If I truly believe in the project, then I'll believe in the asset and then I'll hold that. But when we're trading, you don't want to hold an asset if it starts to go the opposite direction you need it to go to be successful in your trade. That's when you don't want to get attached. Okay, enough on that. Let's move on. Number 6. This is a really important one, and it's important for all of us, including myself. Exit promptly. Don't hope for a turnaround. Exit at the first sign of bearishness. Cut your losses, keep them small, and start afresh or start new. And we are all guilty of this. The trade goes against you. You don't catch it fast enough. So, in your mind, in my mind, I've done this. I felt like, I didn't catch it fast enough. It started going down. I wasn't paying attention. I was running errands. I was doing whatever. I didn't catch it. So now it's past where I wanted it to be and it's going down and I wanted it to go up. So I'll hold it and I'll just catch it later. Well, sometimes later never comes. So it's best to cut your losses and give yourself an opportunity to win the next time you go and set a trade. And why is that so important? Because if you let too much of your money stay locked up in trades that you're hoping and praying will go your way someday, you end up running out of capital. If you don't have any capital to trade, then you can't really trade. So hence why exit promptly. All right, let's look at number 7. Plan your trades. Have a clear entry, exit, and invalidation plan. Don't rely on other people's opinion. Your success is your own planning. So, we all like to listen on social media to all the other experts. I have people that listen to me and I listen to other people. And it's okay to check in with other people in the crypto world to see what they think. But the ultimate responsibility should be on your own shoulders. And what that means is you really got to have your own plan, because this other person that you might be listening to on YouTube, they don't live in your shoes. They don't live in your house. They don't know what's going on with your bank account. So you're the only person that knows everything there is to know about your finances and what you're comfortable with. So you've got to plan your trades. So there's actual trading journals, and it's highly recommended. And I also recommend, I don't do enough of it, unfortunately, but it is a great idea to journal your trades. Write down when you want to buy a certain asset and why. You think it's going to go down. Why do you think it's going to go down? Write it down. Decide at what level you feel comfortable getting into that trade. Decide at what level you think might be a good exit spot. You could change your mind later, but if you write it down, you're really holding your feet to the fire that you've got a plan. So it's really important for you to be successful in trading is to have a plan and plan your trades. Number 8, simplicity is key. There are so many trading programs out there that are so complex. If you don't use their trading software, you just can't be successful. Or there's trading platforms out there that don't really teach you how to trade. They just tell you, I'll feed you information. So I'll just tell you when to get in and get out. So now you're trusting that other person knows more than you do. And they could be right. They could also get it wrong. So simplicity is key. Trading doesn't require complex tools. Focus on managing your position size and predetermined entry points, then exit on invalidation and cut your losses. That is the most important piece of information, is decide when you want to get in, decide when you want to get out, and if it looks like it's going against you, then I would highly recommend cutting your loss and starting again. Okay, let's move on now to number 9. Trade more to learn more. Practice is critical. Trade with a trend, learn from the market's feedback, and refine your methods. And you can only do this with practice. And I love using the technical analysis software, TradingView. It's a great piece of software for going back and doing paper trading, which means you can go back in time where you can't see what the price is actually doing at the current moment, and you can set up trades, paper trades. They're not real trades, and you can practice on paper. I used to do a lot of paper trading back in the late 90s and early 2000 when I was playing in the stock market. Paper trading is very important for your learning. And number 10, last and final, is continuous learning. As I just said, journalize your trades, take notes, and never stop learning. Trading is a rewarding but ever-evolving profession. So true. So this is how we're going to kick off this series. We're going to have, I believe we're going to have 6. So this is one of 6 crypto trading series. And I hope you got something out of this. If you learned something you didn't already know, please share it in the comments. I'd love to know what you guys are thinking. So remember, learning from others' mistakes is better than committing those mistakes yourself. So please read through these 10 rules again and figure out which one makes you feel uncomfortable. Like, does any one of them push a button for you? Say, oh, I don't want to do that. That's too hard. That takes too much time. Whichever one pushes your button, that's where you should start your focus. So thank you so much, Philman. I'm glad this information was helpful to you. If it was helpful to you, then I know it's going to be helpful to others in the group. So thank you so much for joining me today. Remember to please like and share this video to help spread the word about the future of finance. The future of finance in our world is crypto. All right, that's all I have for you today. As always, stay curious, keep learning, share your thoughts or questions in the comments, and I will see you all next week. Bye for now.